Welcome to the daily update. This is being prepared Monday, March 7th, where we'll look at the action in the market today and then see how things look for Tuesday, March 8th. A pretty negative day overall. During the night, the futures had been down anywhere from 1.5% to 2%. So it looked like we were going to have a much lower gap at the open, lower. But as we got closer to the open, the futures prices really started to improve, and we pretty much had a flat open. Now, you can take that one way or the other. If the futures prices had stayed really weak, down 1.5% to 2%, that would have produced a huge gap. And in that gap, you might have seen buyers come in as an attempt is made to fill the gap, either by buying long positions at lower prices or by closing short positions because you have to buy to close those out. The recovery right before the market opened actually ended up being more negative because since we had a flat open, that led to selling pretty much right off the bat. There was no gap to fill, and we just went down pretty strong. And then we ended up closing right at about the low for the day. Now, just to kind of go over again briefly, I'm not going to go into as much detail as I was before, but looking at the situation in Ukraine, this has produced a potential mess for the American economy because we're supporting Ukraine as far as the sentimental and the support and people putting Ukrainian flags on their Facebook pages and so forth. That's emotional, and that will quickly go away. And we've seen that in times before where people are all sad about something. They see children dying, they see cities getting bombed. And yeah, that really gets at your emotions. And it's a very sad thing to see. But those things will quickly go away and then be replaced by something else. So what we need to watch for is what's going on behind the scenes that is not necessarily at the forefront. You might be hearing a little bit about it, but there's a lot of other things at work right now. As far as Ukraine, it's really hard to get good information out of what's going on because we have propaganda on both sides. The Russian media, which ever since communism has existed there and up to the present day, being ruled under Putin, they've never told their people what's really going on. I have a few friends in Russia and I have to tell them what's going on. Well, then you switch over to the US, where instead of the news being something that tells us what's going on, it's become a propaganda factory itself by telling us what we should think, what we should believe, and telling us basically what opinions we should have instead of just giving us information. And so we have to look a little bit deeper to see what's going on. Now, economically, the US is really, it could be backing itself into a corner economically because a lot of people are saying, well, 30% of Russia's economy is oil, so let's just chop off Russia's oil. Okay, we could do that. Well, let's speak theoretically here. The reason that we're not doing that is because if we cut off that oil, we're still buying a large amount of Russian oil. And so gas prices, which are already very, very high, would go even higher. And so a lot of Americans need to decide, do I want to pay more at the pump and cut off Russia, or do I want to keep buying Russian oil? And there's other things that I'll talk about here in just a second, with the hope of gas prices being lowered. And will that satisfy the American people? So what, and it seems like what's coming out of the US right now is if we could lower oil prices, that will make people less unhappy and they'll forget about this. And then we can go back to doing the things that we really want to do. So that's kind of what's moving forward right now. And as I mentioned in Friday's video, the US is starting to talk to Iran again. My goodness, we've been at war with them since 1979. And we've had a lot of really difficult sanctions on them, on the Republican Guard, on some terrorists. Well, there is talk of that coming off the table as far as those sanctions that have been placed on Iran, if they promise to not create a nuclear weapon. Well, we haven't been able to go in and look to see how they're doing on their nuclear weapon program for about 2 years now. So we don't know. They might be almost ready for that. But the idea is, if they don't create a nuclear weapon, we're willing to lessen some of the sanctions against Iran. Iran could then start selling oil to the world, and that might have oil prices come down. Okay, depends on how you look at it. Do you want Iran to be given some freedoms that we took away from them economically? That's part of the question that we need to ask in America right now. And how will that affect the economy? Because if we don't go to Iran, that means oil prices are going to keep going up. Also, there are things that I'm reading about where they're sending people to Venezuela to talk to them. That's another oil-rich country, a country that we have not supported after Chavez came in, and then he's gone, but he basically ruined the country with a lot of the policies that want to be implemented in the US. And that's just amazing to me. But if we can start getting oil from Venezuela, from Iran, and then apparently I heard that the current president, and I really have trouble referring to him by his name because never mind, he is willing to travel to Saudi Arabia, and who is our ally and who we've been basically friends with, even though a lot of the 9/11 hijackers came from there. But anyway, and to talk to them about possibly getting some Saudi Arabian oil, or maybe on friendlier terms with OPEC. Now you have the other side of the coin that's saying, wait a minute, we don't have to do any of this. We can tell Putin to go away. We don't have to deal with Iran. We don't have to deal with Venezuela. Just turn the oil back on in America. We have the infrastructure. We have the ability. Before the current administration took office, America was oil independent. Not only independent, but at the point where we were selling oil to other countries. And if we could do that, that would be a more patriotic way of having oil prices go down. There's only one problem with that. It gets in the way of a lot of the ideology of the Green New Deal, because the idea is by 2030 to have oil wiped out and everything is more green based. So, and then you have Elon Musk chiming in saying over the weekend, which is really, I have to say, I agree with his assessment. Why not fire up the nuclear power plants? It's the safest form of energy out there. Now, people are freaked out about nuclear power because when there is a problem, it tends to be a big problem. It's kind of like an airplane crash. It's the safest way to travel, but when something does go wrong, a lot of people die when that happens. So, but statistically over the years, it doesn't leave a carbon footprint. It tends to be safer. It tends to be more efficient. So yeah, that's another alternative. And you had most of Western Europe being taken offline for their nuclear power. Well, now they're thinking, first of all, Germany has decided we're not going to stop getting our oil from Russia. They backed off of that a little bit. And you have a lot of these Western European countries saying, okay, we might need to fire up our nuclear power plants again. So there's just a lot of different things going on. There's also some different groups in Ukraine where they got the Wagner group. Wagner, really, the correct way to say that is Wagner. And he was a classical composer. He was very anti-Semitic. And Hitler just loved his music. He just thought Wagner was a god with a low G, small G. Well, he probably put a big G there, but I'm using it in a different context. And that is a group of Chechnyan assassins who've been sent in to try to take out Zelensky in Ukraine. Well, there's been some talk in the US. Why don't we, not necessarily Americans, but we're kind of good at this stuff too. What about going into little old Russia and maybe taking out Putin? Now, those are just things that I'm hearing about. But if either of those things end up happening, that could be a real game changer. And what's going to happen in Ukraine, and again, getting the information here, now I'm hearing more that the Ukrainians are fighting back stronger, and that Putin's plan to just kind of walk right in and take over, that's not working out at all, because you're seeing the Ukrainians really fight back, especially over in the eastern area where they've been fighting for 8 years now. So that's really making this kind of a mess. And so does that mean that Putin's going to have to step up things in Russia, maybe sending the Air Force? What if they start attacking some of these? They are attacking cities, but they're using a lot of ways that are breaking the laws or the rules, if you'd say, of the Geneva Convention. They're using tactics that the world has agreed are not the right things to do. If there's a right way to fight a war, it's just there are some guidelines. If you watch Pirates of the Caribbean, you know, it's more like guidelines than actual laws or rules. But Hitler broke a lot of those guidelines during World War II, and now we're starting to see Putin really break a lot of those as well. So things are still a mess in Ukraine. Belarus has pledged support to Russia. What if he goes into Poland? What if he goes into Hungary? And then the other countries that aren't on this map, what if he goes into Estonia, Latvia, Lithuania, those other areas? What about Moldova? So there's just it's a mess, and that's why we're seeing a real mess in the markets right now. And when in doubt, sell. And then with the news over the weekend, that really gave more of a negative backdrop to everything. So let's go back over into the market, and please, I really try, folks, not to put political opinions in here. I have very strong opinions and I have very strong beliefs, but that's not what I'm trying to do with these videos. I'm not trying to get people to see the way things that I see them. I'm trying to share with you what I know, let you reach your own conclusions, whether it's geopolitical, what political stance you have, whether you agree or disagree with what is happening in the US and in the current administration. I'm not trying to influence things one way or the other that way. Those are dealt with in other ways. This is about the stock market, and my approach is, yes, I care, but my main focus in talking about these things is, how's it going to affect the markets? That's the main thing. And so that's why I'm trying to get the facts as best I can. And there's even some very, very good sources that I go to that are confused right now, that I rely on, that I feel give factual information, and they're not quite sure what to make of this currently. Okay, so now we'll finally get back to what happened on Monday. We had a flat open, which immediately saw selling. And then, as I stated, overnight, the futures were down anywhere from about 1.5% to 2%, but they showed a lot of improvement as we got closer to the open. And I was thinking, wow, okay, either one of two things can happen. Either things are getting better, but there didn't seem to be a real catalyst for that. I wasn't seeing any news. There wasn't any economic reports of significance, or we're just bringing things back up to the flat line so that there's no gap and we will start selling. And that's what happened, was the latter scenario. So we saw initial selling back down to a previous S3 level from last week at around the 42.30 level. But then the selling just kept going. I even had to put an S3 level on the chart. Usually I only go to S2, and that was at about 42.04-ish or so. We ended up closing at the low. We were down 2.95%. That's a pretty hefty down day. Volume was above average. The technicals, yeah, they're weakening. You cannot deny that. This buy the dip stuff, as positive as I've tried to make some things, and there's still a basic positive backdrop way in the back, but right now things are quite negative. So this buying the dip thing just has not worked at all, and people are getting creamed for doing that. We're getting near the end of earnings season. There's still some reports coming out. We're going to get the big inflation report this week. CPI is coming out on Thursday, and that's where we get the inflation rate for the previous month. And that could either freak out the markets if it's higher than expected, or send them to the moon going up if it's lower than expected. We just don't know. And then interest rates are bouncing around on a daily basis. And of course, the geopolitical concerns that we're talking about. Okay, then some of the comments that we can take away from Monday, we're back in correction territory. We fell over that 10% level, the way I calculate them. We're down about 12%-ish or so now. Technicals are weakening, and I'll show that to you as we go through the charts. We are extreme as far as the CNN fear greed gauge. We're in extreme fear territory. Prices do remain in a range, but we're getting really down to the bottom of that range now, and possibly breaking down below that. Now, we've been down at this level before, and we saw some strong buying coming in. So don't rule out some kind of a bounce. It doesn't necessarily mean it's going to change things all that much, but just about the time you give in and say, okay, we're just going to tank from here, that's when we see a bounce, and that's when everything gets all messed up. But at the same time, there is momentum to the downsides. And just before I started recording, we're down about 1/3% in the S&P futures as I began recording this video. And of course, Russia, Ukraine dominate the news, and then all the oil issues that are going back and forth. I'm trying to think if there's anything I forgot about, because I've been really trying to focus on this whole oil thing. Yeah, let's just shut it down. But the ramifications of that on the US economy could really be devastating, because we get a lot of our oil from Russia. Okay, economic reports that came out on Monday. We had consumer credit, and there was an increase in the amount of debt, but it was less than expected. But this isn't really that big of a economic report. The market continues to be overvalued. Yes, we could fall 30% from here just to get back to an expensive historical rating right now. As far as our trend, it's negative and strengthening. Our bias and our momentum right now are also negative. So looking at the day's session, as far as sentiment, here we're down, we're way below 20 now. We're in the 13 range. We had been in extreme fear on Friday, only to have it, we were at 17. We dropped down to 13 after Monday. And here's the chart. So, but this could go lower. See how low it went back in the COVID plunge here? If things get really bad, it could go lower from here. But that could be just something to put on our radar for right now, that emotions are getting very fearful. And many times we can use that as a contrary indicator that will suggest there may be some kind of a bounce. We're just not, it could happen on Tuesday, or it might need a few more days to play out. Another thing, this is, and if you look at some of the other videos that I have posted where I talk about mutual funds, there's a big debate going back and forth about, is it better to have passive mutual funds like S&P mutual fund, S&P 500, Dow, NASDAQ, where you're basing things around an index, and that's called passive investing because you don't have to do anything. I could be an index fund manager, because whatever stocks make up that index, those are the stocks that you own. You calibrate them based on their weight in the index, and that's pretty much all the work you have to do. Well, there's also a school of thought out there that there are some rock and roll money managers who have done a really good job of actively managing funds. They're the ones out there trying to find the next latest and greatest stocks. And a lot of people prefer that type of mutual fund investing. Well, what this chart comes out with, and it's updated every week, is as these lines are going up, that means that active money managers are taking more risk. They're getting into more growth stocks. They're getting into investments that it's risk versus reward. If you take more of a risk, you have a potential of getting a higher reward. As this is falling, that means that they're getting out of riskier investments and going back more into conservative investments. And that's one of the reasons why. See, they have a flexibility that index funds don't have. That's why when we get into a real decline in the markets, a sustained bear market, that's usually why actively managed mutual funds outperform index mutual funds, because index mutual funds just go down with the index, where the money managers in the active funds, they can maneuver things. They can try to find defensive stocks. They can get out of one area and get into another area. Well, what we've been seeing lately is that they are really decreasing their risk exposure right now. And that's been a trend for most of 2022. They probably topped out a little bit after we hit that all-time high. Well, we've been seeing a real decline. I'm going to start including this chart in the weekly video, but then when it comes out, I will also start including this in the daily video as well. Okay, so let's look at some of our other charts. The VIX, it closed at a scarily high number, and I know scarily is not a word, but that was the closing basis. It didn't look quite as bad on a closing basis with the bar, because we had a higher bar earlier, but then we closed off of that. Well, here, but what you're seeing is a series of higher highs and higher lows. I kind of put my cursor in the wrong spot there. That's more sustained increasing fear right there. So this just shows that fear has been steadily increasing over a period of time. And yes, on a closing basis, we are at a very high level. We have not been at this level as far back as this chart goes. Same thing with the VIX of the VIX. We're closing at a high level, although we did close higher than this before. But still, it just shows an overall upward trend in fear. Looking at the Ulcer Index, again, as stocks go down, people are more stressed out. And so this indicator goes up, and it did advance on Monday. Here's the longer term view, looks a lot smaller. That's why I want to give the alternate views here. Our sectors, there were two sectors that were up. Utilities, which are kind of interest rate sensitive, because they've been doing okay lately. And then energy, of course, because oil is going to the moon. All the other sectors, discretionary, tech, financials, even the value plays, all saw a real down day on Monday. So other than the more oil and energy areas, everything else was pretty much down, and down pretty heavily. Here's what it looks like since the all-time high, with energy in the lead, discretionary taking up the rear now. As far as inflation, the BDI did advance. It's showing a little bit of an increase in inflation as far as this index is concerned. CRB also shooting to the moon, up another 1.5% on Monday. And then this is thing called the COM dollar. This is the commodity dollar, and this is a new chart that I'm adding. It's pretty much the same. There's not a lot of difference between, well, this is a longer term view, but this is trying to take out currency fluctuations that take place, but they're almost a mirror image of each other. But this thing is just going parabolic up, but we could be getting back to some resistance if we keep going higher. As far as the Fed, ever so slightly, that idea that we might not see a change in interest rates is it's even on the table still. It started out at a 2%, and after Friday it was a little over 4%. Now you have about 5% of the market thinking that they might not do anything. Well, on the other hand, you have almost 95% saying, yeah, they're going to raise interest rates 1/4 to 0.5%. That 1/2 to 3/4, it's now off the table. So here we can see more of the historical context with the 1/2 to, or yeah, the 1/4 to a 1/2. It declined a little bit on Monday, but it's still way in the lead, with the 0 to 2.5 just creeping up slightly. And now the 1/2 to 3/4 is pretty much non-existent right now. And so this is creating that really strange scenario. We are in a high inflationary environment, and there's even discussion that the Fed might not raise interest rates at all to try to slow inflation down. Can you see the corner that the US economy is backing itself into here? And nobody, I mean, everybody has answers and everybody claims to be an expert, but we need the right answers and we need the right experts to tell us what to do here. And incidentally, if you agree with what's going on, if you like the idea of shutting off Russian oil, of going ahead and talking to Iran, go ahead and talking to Venezuela and trying to talk to Saudi, if you think that's a good idea, write your representatives and tell them that, or call them. If you don't think that's a good idea, write your representatives or call them and tell them that. We have a form of government that is supposed to have participation by the people. And if the people don't participate, then the people that we've elected just do what they want to do. And it's easy for us to pick out the president or even people in Congress because that's one or two people. Where we really need to be going are to our local representatives, our state representatives, the representatives at the federal level that don't get as much press, but we still are supposed to have the First Amendment right in this country. And if you like or don't like what they're doing, support them if you do, and tell them that you don't like it if you don't. That's American government. To be successful requires participation from the people. All right, technical alerts. We got a whole list. I had to scrunch it down a little bit. The euro set a 52-week low, and you'll never imagine up here at the top that the dollar set a 52-week high. The NASDAQ dropped below 13.3, 13.2, 13.1, 1300, 12.9, blast off. The S&P went below 43, and it's just above 42 right now. Real estate seeing some strength. It had a BPI that crossed above 50. And then all the sectors, except for energy, are pretty much showing real weakness right now. Even whether it's growth or value, they all got hammered on Monday, except for oil. Set a 4-year high. Gold has been doing very well. It set a new 52-week high. So a lot of the fearful areas and the areas that could affect us economically, they're seeing real strength. The other areas that we might have some of our investments in, they continue to show weakness. Look at the intraday chart. You can see from Friday to Monday, we had a big bar at the close. We opened pretty much flat, and then doink, we just went down. We went down, we blew through S1 within the first 20 minutes. We got down to S2. There was a little attempt at a bounce right there, but no, that didn't take. That shot us down to a previous S3 level that we hit last week. We danced along that line for a while, and then we shot down to S3 that I had to put on the chart here, and we closed right at that low. So this was a negative day. Does that mean Tuesday will be negative? Not necessarily, but the momentum and the trend and the sentiment are all pointing to things going lower right now. But be careful. When everybody's pointing in the same direction, quite often the market might try going in the other direction. Here's the bar chart. We're coming back down. I added some things here because we've broken through this intermediate term support that we had been looking as potential hope. Well, we just blew right through that. There is the previous lows that we've set recently that might provide some kind of support. But if you want to find longer term support other than our pivot levels, because we're below the pivot and we're still working our way down to S1, if we go that low, we have longer term support a lot lower than where we're at right now. So this is a pretty negative looking chart. We had been looking more positive with higher highs and higher lows. Well, all that got thrown out of the window on Friday when we gapped lower and are continuing to fall lower as well. So this could be just a short-term plateau before we get set to fall. But we've seen recoveries from these kinds of things before at the same time. We're down 12.41% on a closing basis since the all-time high. So that is correction territory now. Growth versus value. See, growth fell. Value actually saw a bit of an increase on Monday. And I'm trying to introduce some new charts as well. This is the chart that we look at. This is growth measured against value, where growth is declining. Here's another chart. This is the mirror image or the upside down version of this chart. This is value versus growth. And you can see how we've broken above the moving average. And we are seeing on a closing basis, higher highs and higher lows as it continues to go higher. Then the NASDAQ 100 actually underperformed the S&P 500 on Monday. So we're seeing a decline in growth stocks and in tech stocks. As far as our trend, the ADX picked up some strength. It is a negative trend because the red line is on top and we're seeing buying power really trail off. So the trend is clearly down and has been down, but there was a lot more conviction in Monday's price action. The mass index, we're just kind of waiting on this because we're still at support. But if we really start to race down and we take out the gap lower that we saw, that was back when we saw the really rip-roaring day. If we take that out, then it will probably be that the signal that this was generated is that we are down. And you can see here, we're starting to set some kind of a trend line. I didn't draw this on here. I might add that for the next video, but we have a downward sloping trend now. The Arun didn't really change all that much given the down day. That's because we're still at the lower end of this range. It's getting a little thinner down here, but it goes back and it sees what happened recently. So yeah, buyers were in control after Friday, but we saw a little bit of a decrease on Monday. However, we did also see a decrease in, did I say buyers? Sellers had control on Friday, but we're seeing that decrease. Buyers are also decreasing. And when you compare the two, the Arun continues to go sideways overall. Scorecard has not changed for decision point. As far as our breadth, negative based on price and volume, starting to drop below the moving average. And this negative divergence that we've seen for a long time is starting to come more into play if prices continue to fall. Advanced decline ratio did decline, but it's not giving us an extreme reading currently. This is the one kind of encouraging thing that we're seeing. Even with the decline, we saw new highs outpace new lows on Monday, and the overall trend is up. That is a positive thing. It's just a piece of the overall puzzle, but it is something to give a little bit of hope. The accumulation distribution did decline, but we're still slightly above the moving average. Our short-term 20-period moving averages, they're like distant relatives now. The moving average study declines 20, 50, 200. We're well below all the moving averages down here, and the spaghetti is starting to chase us lower. MACD, switch back negative. Not a surprise there. STO, negative and drop below zero based on price and volume. McClellan oscillator, which just barely ticked up positive, has now dropped back down to negative. The stochastic RSI has come after coming off an overbought reading, has declined and is below 0.5. Williams percent R, which didn't really shoot up as much, it's dropped below 50 and is headed lower and still could have more room to go down. Force index, much more negative after Monday's action. This is one thing to be aware of. This is just a one-day rate of change, and we're seeing a real extreme move, which might suggest that some market participants may look to do some buying on Tuesday, because we fell pretty far pretty fast. And so those that are looking to get in at lower prices, they might decide to do that. And if a lot of people do that, we might be able to see some kind of a bounce on Tuesday. Also, looking back 5 days, the rate of change is getting into extreme negative territory, which could provide some shorter term support as well. Intermediate term, long ways away from the 50, the PMO negative across the board. It was trying there for a while to turn positive, but it so far has failed. PMO study, those that are rising, declining. Those that are giving buy signals, declining. Those that are above zero, declining. BPI, after this was some internal hope that we were seeing that didn't ultimately come through in price, at least yet. The BPI had been rising. Well, with Friday and Monday's action, now we're seeing things turn back lower. And here's just a longer term view of that same chart. Moving average rainbow, distant rear view mirror currently. Stochastics, negative short term, intermediate term, turning negative longer term. Summation index, negative based on price and volume. Again, we saw based on volume start to turn up ever so slightly. Sometimes that can lead prices higher. Didn't happen this time. Our oscillators pretty much negative across the board on all of the momentum studies that we look at. The vortex showing this is, again, possibly a little more positive. Even though the red is on top, we saw a decline in selling pressure, but we continue to see a decline in buying power as well. The CCI, which I keep saying I'm not going to show this anymore, but then we drop back down into extreme negative territory. This is a longer term view. This is a 20 period calculation of the CCI. It is also going extreme negative and still could fall a bit more. RSI continues to fall, but not giving us an extreme reading right now. And then here's another rate of change. 50 period, looking back 50 periods, we're starting to get extreme negative again. We got a little bit of a bounce when we saw this before. Well, we're getting back down to here. Can we bounce again from here? Trading systems, negative. Elder, it switched negative on Friday, and with the decline on Monday, just continues to be even more negative. The SAR, which never did turn positive, even as we were trying to advance up out of this, continues to be negative. Our different charts, the Heiken Ashi with the solid bars is negative. The Kegi is now put in a red line, and that is negative. Renko is looking more negative. The three line break, which had been hanging in there a little bit positive, well, it's now looking more negative. Equi volume. Also, we're trying to look across here for some kind of support levels, but it is negative overall. Point and figure, there's no signal right now, but that pole where the pole was supposed to be these zeros, and then it looked like we might be climbing the pole, that's off now. because we had 4 new red circles painted in after Monday, but there's not an official point and figure signal being generated right now. It's just looking more negative. I'm sorry, not stochastics, Fibonacci, we've been holding around the 38.2 to 50%. Well, now we're between the 50% and 68.1 level. Longer term charts. I'm switching over. I have to, folks, because the longer we stay below these moving averages, the weaker the long-term trend is going to get. And so we're leaning more towards negative until proven otherwise. And we're getting further away from the moving average. We can also see that we are well below the moving average with the logarithmic scale also. Special K has been negative and continues to be so on both charts. Broad market, S&P down near the bottom of this range. This is not a very good looking chart right now. This is a very vulnerable looking chart. We're going to have to see some real conviction behind some buyers to come back in and get us out of this cliffhanger that we're seeing right here. We're at the bottom with the mid caps. We're still more in about the mid range with the small caps, but still seeing declines anyway. Fang Stocks, they got taken out and shot again on Monday. They closed right at the low with a 4.41% decline. Kathy, I watched her video over the weekend. I don't listen to the videos that people make about her. I listen to her herself, and I respect her. She's convicted behind what she does. I may not always agree, but anybody who has reasons for doing what they do, I can at least respect that. She's saw a real bad day. Again, down 3.62%. Dow, below the pivot and kind of looking like it could be dangling from a cliff right now. The the small caps, again, looking a little better because we've been in this area before. Then the mid caps also getting to the low end, and we're right at about S1 for the mid caps. NASDAQ also looking like a dangling cliffhanger right now with S1 not far below where we're at. NASDAQ 100, kind of the same thing with the recent death cross. The Vixen saw a real spike up as prices declined. NYSE also, when this starts to break down, that's when I take more notice because this is a more broad base. This and the Wilshire, which I'll show you next. This is looking pretty vulnerable right now. Then the S&P 100 actually outperformed just a little bit. It outperformed the rest of the S&P 500 on Monday, where we've been seeing more of overall weakness lately. Here's the Wilshire, also looking pretty vulnerable with S2 still below us. A lot of volume in the Wilshire. Look at that volume spike. Could that be a blowout? Could that be a capitulation? Could that be something that gives us some support and we see prices bounce up out of here? Of course it could. But we need to see some follow through in order for that to happen. Internationally, all the stock markets are showing extended weakness right now. Here's our all stocks. It also looks to be breaking over, and we are having a death cross. Broad market, dollar, yeah, it's almost back up to 100. And as the euro comes down and the dollar goes up, I wonder if they'll be able to kiss. So we'll have to see. It'll be, the dollar has to get up to around 102, 103, 104 for it to actually meet up with the euro. But that's one of the saving graces right now, is that the dollar is showing some strength. And then here's the new start to the weekly chart right here. Oil just shooting to the moon, baby. This is parabolic. Could this be a blow off top? Maybe. But a lot of things are going to have to happen for that to change. And gold also has been doing well, up almost 1.5% again on Monday. So it's been doing pretty good lately. And then here's the ETF, which is showing more of a breakout right now. for gold. Silver also, this is a pretty healthy looking chart. Higher highs, higher lows for the most part, and we are seeing a real advance currently. And then this is just a longer term chart that I wanted to add. Since silver seems to be kind of doing something, I wanted to give a longer term look on this one. But this is the silver ETF right here. And then here, Palladium also, just, it actually fell a little bit on Monday. It spiked up higher on Friday. That's another precious metal that I like to watch from time to time. Copper, after kind of breaking out and looking like something would happen, well, it has now fallen back into this overall range. The reason I watch copper is if we're seeing economic strength in a bear market, we usually look to the copper market because it tends to do better first. Well, when copper starts to break down, that shows that there could be a weakening economy. It hasn't really been showing as much of anything for the last year or so. It's been treading sideways. And so the fact that it broke out made me want to include this chart again, but now we're kind of coming back down again. Bitcoin's having some trouble, not performing away a lot of the people had hoped it would during a time like this. It's down right before I started. It was in the 38s, so it's dropped below 39 currently, but it's kind of bouncing around between 30 and 40. It had gotten back up into the mid 40s, but then saw some weakness after that. Bonds, we still are seeing this fall between the 10 and the 2-year credit spread. Again, it's not necessarily suggesting that we're seeing tightening monetary policy because they're not going to raise interest rates and they're still doing quantitative easing. So this might suggest that we could see economic weakness. Now, I could change that. Things could happen over the next few days, but where I'm coming out right now is that as this continues to fall, with inflation and the way the Fed and the government have backed themselves into a corner, we might be heading towards a recession. Fibonacci, again, getting less relevant now that we've broken down below the 50% level. Interest rates were up a little bit on Monday because bond prices declined, I believe. Yeah, interest rates were up 30, 10, 5, 2. And even the 3-month, we saw an across the board advance in interest rates. With the international interest rates, the German Bund is slightly negative overall. You've got a lot of really, really confused people that make important decisions. And that's not a good thing. Yeah, bonds did decline a bit overall on Monday as far as their price. Then the corporate bond index actually declined, and the current yield is around 3.24%. This is as of Friday. Sometimes there can be some lag time here. Longer term chart for the corporate bond yield. Relative studies, I have a few more to add. This is the one we've been watching, gold versus the S&P 500, where gold continues to break out, and we are now seeing a cross. Then energy versus the SPY, also not surprising how energy is just seeing a nice breakout. These will all be daily charts. I'm going to try to just show daily charts in the daily videos and then weekly charts in the weekly videos, and you'll never guess what I'm going to show on the monthly video. Yes, monthly charts. And then the growth versus bonds. That's another thing we want to start looking at here. Is we're seeing a real decline in growth. And even though bonds are nothing to write home about, they have been outperforming growth stocks lately. This is the TLT ETF. And then here's the tech versus the SPY, also breaking down and below the moving average. Here is tech versus the 10-year. Back in early 2021, this really came into play. And we were seeing a lot of things really start to happen here. We're seeing a little bit more of a relationship between tech and interest rates. If interest rates go up, tech goes down, and vice versa. So we want to keep an eye on this. And currently, tech has been underperforming the 10-year yield, even though interest rates are nothing to write home about. This is the 10-year yield versus tech. So this is just a flip-flop of the other chart, which shows that interest rates have been outperforming tech. Here's another chart that I want to show. This is consumer discretionary, the things you don't have to have, versus consumer staples, the things that you do have to have. Well, that second car, that vacation home, that jet ski, that RV, we're seeing a real decline in those things as people are going, okay, I need to go buy some toothpaste and toilet paper because they might double in value over the next month or two, or double in price, I should say. So what are we looking for Tuesday? The S&P is back in correction territory. We're in that short-term range, but it is falling. We are looking very vulnerable right now. It would really be nice to see some buying come in to take us out of that vulnerable look, but it also could continue to see more declines. We're still dealing with earnings season, but we're coming to the end there. We're battling between growth and value. On Tuesday, we have nothing of real significance as far as economic reports. The trade balance, we got the small business optimism index. Boy, that's probably going to be really high, don't you think? And then wholesale inventories, which probably saw an increase with the real slowdown, but then it might see a decrease because of the supply chain issues. And then the big thing at the forefront right now are the things going on between Russia and Ukraine. And in the background also are the Iran talks. Oh, another thing I forgot to point out is that they're even considering bringing in some militias or some killers from Syria to kind of see if the situation might change a little bit. So that could make things even scarier because Syria's been having a lot of problems for a long time. So our conclusion right now is that we are negative and at the bottom of the range, and we could fall more from here unless we see a real aggressive bounce. Short, intermediate term, we are negative. Long term, because we've spent now quite a bit of time under that moving average, I'm switching over to turning negative currently. So thank you very much. Try to have a really good Tuesday. I hope you have the best Tuesday ever. And I will talk to you again after the market closes on Tuesday with my analysis and commentary.